Welcome to this week's Property Insider Chat, where I'm joined by Dr. Andrew Wilson, Australia's leading housing market economist. Today we're going to dive into the latest My Housing Market statistics for the end of July. House prices have again risen over the month, but it's clear the markets have been quite fragmented. Despite these fluctuations, the national house prices increased now in 17 out of the past 18 months. Over the past year, we've seen an impressive 8.2% rise. And looking back over the last 2 years, even during taking into account those challenging times in 2022, overall, house prices have risen 9.4%. So whether you're a homeowner, investor, or just keeping an eye on the market, I'm going to ask Dr. Andrew Wilson to analyse these latest trends and provide some insights to help you navigate the ever-changing property landscape. Hi, Andrew.
Yeah, good day, Michael. And another month's flown past. Of course, we're heading into August now, and that means it's the preliminary month for the spring selling season. Can you believe we're talking about that already? But it's been quite a heady winter, really, in terms of market activity. We are really starting to see the winter slowdown, I guess you could say, impacting markets, but it's still quite a strong market for this time of the year generally, and that's what our auction clearance rates are telling us. But yes, July's gone past, and another month of higher prices on the national house price model, up by 0.4%, Michael, over the month. That's comparing the July quarter to the June quarter, so it's a rolling quarterly model. And that gives us plenty of observations, plenty of sales to analyse, but it also means that we can shift it from month to month, so we can see that emerging trend in a much more real-time environment. But yeah, up by 0.4%. That was actually higher, Michael, than the rise we had over the June quarter compared to the April quarter. So even though the market did rise stronger, we really are seeing, as you suggested, a much more a consolidation of that fragmented market energy now, and it's clear that the big contributors to higher house prices nationally are the big three, if we could call them then, and that's Perth, Brisbane, and Adelaide. No real signs of those markets slowing down at all, and I think we're seeing some easing in prices growth in Sydney and Melbourne. Melbourne's course has been a bit of an underperformer over the past year, still growing, but not growing as strongly as those other major capital cities are. So yeah, a little bit of the winter blues hitting the market in terms of Melbourne and Sydney. And it's just, not just holiday distractions, it's also this time of the year we tend to get a higher proportion of lower priced properties in the market, because we do get that hiatus through the higher priced or the higher end of the market through midwinter. Perhaps they're the ones who can afford to be on holidays, but nonetheless, that does push the median down because of that lower volume. Particularly in Melbourne and Sydney, Michael, we see that effect because, of course, they have substantial prestige markets as a proportion of the market, a much higher proportion generally than we do see in Perth, Adelaide, and Brisbane. But those three markets keep on keeping on, and we just have been saying the same old thing really for most of this year, just how strong, well, certainly over the past few months, just how strong those capitals are. And if we look at the results, we can see that the top performer this month was Adelaide over the quarter, up by 2.5%. That was followed by Perth up 1.8%, and then we had Brisbane up 1%. So clearly ahead of the rest, those three markets again. And when we look at the annual growth rates, Michael, for Perth, Adelaide, and Brisbane, they really have cleared out from everybody else. Perth, remarkably, house prices in Perth, Michael, are now up by 26.9% over the past year. That's quite extraordinary. Adelaide up 19.2% and Brisbane up 16.8%. These are very big numbers, considering we're still in that higher interest rate environment, Michael, and plenty of chat about house prices falling because of higher rates. But that certainly hasn't been the case in those big three markets. And no sign of slowing down, Michael, either. It's a very strong environment continuing there. Sydney was down 0.1%, Melbourne down 0.3%. As I said, I think it was a little bit of mid-year price mix or property mix that's affected that Sydney market, because clearance rates are still quite strong in Sydney. I just think the prices have been affected by the mix of properties that are being sold. Melbourne similarly down by 0.3%. These are really steady results, at the margin for these capitals. But again, as I said, the winter effect. But Melbourne has been an underperformer compared to the other major capitals. Sydney's still up 6.2% over the past year, Michael. Melbourne up just down 0.6%. So the Melbourne market's been relatively steady, but it really is I guess a story of three markets in a way. Melbourne and Sydney steady, some seasonal impacts there. Brisbane, Adelaide and Perth, they're just tearaway leaders now in the national prices, the capital city house prices. And the smaller markets, Hobart, Darwin and Canberra, certainly have been struggling in comparison to the results for those other markets. And we have seen lower prices in Hobart, Darwin and Canberra over the past year. Canberra flat at just 0.4% lower, but Darwin down 3.6%. But that Darwin market does have a volatile model because it's a smaller market and it is affected by very significant seasonal effects, the wet and the dry. But the Hobart market really has been a clear underperformer, but that tends to be a little bit of a non-conformer to what's going on in overall capital city markets, Hobart. But as I said, clearly a fragmented market in terms of what's happened in house prices over the July quarter. Unit prices, however, fell, Michael. When we look at the unit price model, they were down by 0.2% over the July quarter compared to the June quarter results. That's the first fall that we've had in units since January. So even though the unit market has been quite robust, we have seen a little bit more volatility there. But the interesting thing when we look at the breakdown, and we just see that the national unit prices are still 6.2% higher than where they were a year ago. So similar to houses, the national result. But of course, the national unit price and that national house price model is a weighted average of what happens with the other capitals. So the weightings are calculated based on the number of sales in each of, the number of listings in each of the listings and sales. In other words, the volumes in each of the capitals. So it is always skewed towards the bigger capitals. That's of course Sydney, Melbourne, and Brisbane. So they, in the weightings, they take up the majority of the inputs to the national market. Now, I'm saying this not just as an explanatory process, but also it does explain why the national unit price fell. And that's because the Sydney market was down by 0.5%. And Michael, the Sydney market accounts for nearly half of the national price, because Sydney units are a very big factor or have a very big volume in terms of the number of sales compared to the other markets. So when Sydney went down marginally, it did act to push the national house price down. And of course, we've mentioned that the Sydney market is suffering, maybe not so much in units as houses, but there is still some seasonal effect in that Sydney market this time of the year, where we're not seeing certainly the volume of higher priced units in the market because of those mid-year holiday distractions. So Sydney, and again, Melbourne was down 0.8%, and that also is a significant unit market, and that's again helped push down the national price. But looking over the past year, Sydney units still up 4.1%, Melbourne units up 0.6%. But again, we see the big three, Michael, really the leaders there in unit price growth. Top performer was Perth, units up 2.7% over the month. Adelaide up, Brisbane up 2.4%, just below Perth, and Adelaide up 1.6%. And again, when we look at the annual results for unit prices, Michael, in those three capitals, some really extraordinary results. Perth unit prices up 28.9%. Brisbane unit prices, big market, that Brisbane unit market, Michael, 26.7%. Adelaide up 19.5%. Now, we must mention that Adelaide and Perth don't have the volumes of units that particularly Brisbane, Melbourne and Sydney do. So those volumes, those growth rates can be affected by the mix of properties coming through, but nonetheless, there've been extraordinary growth rates in unit prices in Adelaide and Perth. But Brisbane is a significant unit market, Michael. It has very strong, particularly inner city unit profile. And that helped actually minimise the fall in the national house price model because it was up 2.4%. But Brisbane units, Michael, have increased by 26.7%. Over the past year. And Brisbane units, Michael, are now up 39.1% over the past 2 years. So anybody who'd sort of got into Brisbane units a couple of years ago would be pretty happy with those results going forward. So again, that fragmented market affecting the national result.
Some interesting observations there, Andrew. Firstly, it's probably not going to take long for the Brisbane median house price to get to $1 million. That's not that long away considering how Brisbane's growing, and it may even overtake Melbourne. But the gap between the difference between Melbourne and Sydney house prices and unit prices is quite significant at the moment, suggesting that if people have got a long-term perspective, there's some reasonable upside in the unit market in those big capital cities.
Yeah, that's right, Michael. And I think Melbourne's still a sleeper, in my opinion. We've seen some more positive results from the rental market in Melbourne recently. We will be releasing our rent report over the next week or so for July. And certainly rents have risen sharply in Melbourne, particularly in the unit markets, and vacancy rates have fallen in Melbourne. So and that's translating into more investor interest in particularly Melbourne units, chasing those higher yields, and also now chasing potential capital growth. So that's usually how we see markets turn from the rental market. Investors recognise higher yields, and they're coming through now in Melbourne, not just because of steady prices, but because Melbourne's finally catching up with the rental growth that the other capital city markets have had over the past few years. And that's, acting obviously as an incentive for investors to get into the market. So as I say, I think that, and we're certainly seeing that now, and unit sales particularly are on the rise in Melbourne if we look at current anecdotal evidence. And I think that will drive opportunities going forward in Melbourne, which we have been speaking about. And of course, we wouldn't expect to see that emerging for another month or two, because we are in the trough of the midwinter market. And we will start to see some even more positive results in auction markets over the next couple of weeks as we move into August, as we always see that renaissance, that revival in the market as August progresses, particularly in Melbourne and Sydney.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, our housing market started 2024 with a bang, with a lot of people expecting interest rates to fall sometime during the year. They were hoping it would happen in the first half of the year. Clearly, that's not happened, or likely to happen for quite some time yet. So what do you see ahead for growth rates of our housing markets?
Well, I think that, we've sort of moved through the cycle now, Michael. It's been the negative cycle from higher interest rates, which spooked the market in 2022. Of course, we saw prices fall nationally around about 10% through 2022. They then recovered all of that and some last year. and they've continued on this year. Of course, migration still is a key driver of the market. Undersupply, we don't have anywhere near the properties that we need to satisfy housing demand. And of course, we're now starting to see investors moving quite sharply into the market. We've discussed that latest home loan data
Yes.
from the ABS, and that's been a big surge in investors who are obviously chasing strengthening markets and high yields. But going forward, I still think the outlook for interest rates is steady. Of course, we have a decision coming up shortly. We've got inflation coming out also shortly, the monthly inflation data for June. I think that might be another higher result, particularly for the headline rate, Michael, because we have seen higher fuel prices over June compared to June last year. However, we'll wait to see what those results are. But I think that the Reserve Bank is quite determined to hold their powder dry, regardless of shorter-term movements in inflation. And I think that means the outlook for inflation is steady. And that's a really good thing for our housing markets. It gives us certainty and predictability, because once we start shifting interest rates up or down, it creates those disruptions in the marketplace. But nonetheless, it's a difficult place to secure a property in Australia, and will become even more so. And that's just a product of not having built enough houses over the past decade and units over the past decade, and it's going to be very difficult to catch up with that. Rental prices, which have driven investors, are starting to show some easing now, not falling, but not growing as strongly. But that's just because they've run away from affordability, because they've grown so quickly. It's a struggle now to, get into the rental market for tenants. And, we're not seeing wages rise at the level they need to keep up with those extraordinary rises we've had over the past year. So I guess we're going to have another similar result next month in terms of prices, but the clear fragmentation shows no sign of changing. The big three are continuing. The big three, I mean Perth, Brisbane and Adelaide, continue to support the market going forward. No signs of those markets slowing down. I don't think they will slow down, Michael, because we've got to understand that even though they've had that extraordinary growth, their prices are still below Melbourne and Sydney, particularly Sydney, and yet their incomes are at or higher than Melbourne and Sydney. So they've still got a significant affordability advantage, buyers in those Adelaide, Brisbane and Perth. And I think that'll continue to support prices, and with that undersupply and still a drive from migration, I think prices will continue to grow there. And we await the spring revival, as we always see in Sydney and Melbourne. And as I said, that Sydney market's still producing very good clearance rates for this time of the year, Michael. And I think the price result just reflects, that most of the activity is now occurring in mid to lower priced suburbs.
Well, another month's gone by, and the property
Yes.
pessimists have hibernated. The bears are in their caves because the markets keep moving up. I look forward to catching up with you next week for our regular Property Insider chat, and we'll also have a chance to catch up and see what's happening with our rental markets.
Yes, that's right, Michael. Good on you, and we'll see you then.